Hello, this is Dr. Duru with What Happened in the Housing Market. This September 2025 edition is called Rate Cut Fail. Before I dive in, let me give you some background. I write about the housing market about once a month on my blog. For the first time, I'm trying a full video summary. I would appreciate any comments or feedback. Put them down below. If you like the content, please go ahead and hit that like button and share with your friends. I'd love the algorithm to know what's up as well. And if you want more of this in the future, go ahead and hit subscribe. All right, let's go ahead and dive in, starting with the summary. Okay, so as background, I like to do these housing market summaries for general interest, but I'm really focused on the investment or trading implications for home builder stocks. So, what happened in September? Well, the stocks of home builders are precariously teetering on a return to bear market territory. When I get to the charts, you will see what's going on there. This is very important because home builder stocks just transitioned from a bear to bullish reversal, and that reversal looks like it's under threat. It's looking very tenuous or tentative. You could use any of those terms. Now, while home builder sentiment remains just above historic lows, and actually I should really say pandemic lows, a measure of future sales expectations showed some fresh signs of life. So this is encouraging, even though home builder sentiment is still overall negative because it's below 50%. We'll get into that with the charts as well. Single family housing starts continue to decline well below the 1 million level. And this sets up a stark contrast with the small improvements in future sales expectations, which are keeping home builder sentiment propped up. And this is really important because home builders are probably scaling back on those starts because of weak demand. All right, let's go through the next summary. Now, what you see here is that sales of new single family homes surge, but they'll likely incur downward revisions. And again, as with everything, I'm going to show charts. You'll see what I mean. It'll be very obvious. Existing home sales they continue to bounce along the lows of the last few years or so. Very boring, very predictable, not much to see there, but I have to show the charts to be complete. And then mortgage rates fell to a near 1 year low. The very good news for home buyers and actually probably for home builders as well. All right, let's go into our first chart here. What you're looking at is an ETF. It's an exchange, ETF stands for Exchange Traded Fund. The ticker symbol is ITB, and it consists of mostly home builders, but some other house construction related stocks like Home Depot and Lowe's. What I want to point out here is that you see this 20% line. This is the bear market line. What is a bear market? Well, it's measured from the all-time high, 20% down from there. That's where a bear market starts. And home builders had been in a bear market and had just popped out of the that bear market right here. Now, unfortunately, and why did I call this rate cut fail? Well, you can see that not only did ITB sell off going into the rate cut from the Fed, it actually continued to sell off from there. And then earnings from Lennar Corporation, ticker symbol LEN, further weighed down on the index. Lennar happens to be one of the biggest home builders. Let me draw some circles here so you can see exactly what I am referring to. So here you have where all the action is. Hopefully you can see that. And that red line there is called the 50-day moving average. It's an average of the last 50 days of prices. You can see it's uptrending. It's uptrending, but the ITB is sort of pivoting around that. So it's teetering. It's teetering on that support. And this is called support because it's helping price stay up. Now, if it falls off of that support, you can see again, this bear market line is right here, and I really don't want it to crash below that. Now, as some additional trading and investing context, I'm a permabull on the housing market and on housing stocks. I think of pullbacks or crashes as buying opportunities, and rallies, particularly hype cycles, are an opportunity to sell or sometimes just to ride the momentum as high as I see fit. Okay, so I mentioned Lennar as being a troublemaker for the index. So let's take a look. Here's Lennar Corporation. It is the ticker symbol LEN. And what I want to point out here is that it dropped 4.2% after it posted earnings. What are earnings? Earnings are when a company uh, basically admits to how the business did in the last quarter. And it fell 4.2% and it dragged on ITB. Now, Lennar importantly acknowledged that it thinks it's going to have to continue to incentivize sales primarily with buy downs and other incentives to keep sales propped up. Investors did not want to hear that. They want to hear instead that these rate cuts from the Federal Reserve are what's going to prop up demand and not cutting back on margins from home builders by doing things like giving out incentives. So that's why Lennar fell. And in fact, Lennar is a really strange home builder because it hasn't had a positive response to its earnings, one day response since I think March 2024. Now let's go on to the next builder, which is KB Home. I do have a position here, just a small call spread. I forgot to mention, I also have a core position of shares in ITB. And what you see here is that KB Home, ticker symbol KBH, here's the all the action here. Notice how well it's holding on its 50-day moving average. Again, that's the red line. It's the average of the last 50 days of prices. It's a rolling average. And you can see that it actually held up. Now, it popped up right after earnings, came back down, held that support, and now it's slowly bouncing up. So I like to see that, particularly because the seasonal the time of seasonal strength for the home builders is coming up. It runs typically around October to April or May. Sometimes it starts as late as November. And that's when I really get aggressive with buying home builder stocks. So I'm holding this. I'm hoping that KB Home is showing some early signs of that trade being a success again in the coming year. And again, I've written about this on my blog. At the end of this video, I'll show you some information on how you can get more details on this video summary. Okay, let's move on now to the housing data. This is the housing market index. It's also known as home builder sentiment. It's referred to as the HMI, which is the acronym for home builder for the housing market index. And you'll see right here, sorry, right here, I overlay the black line is HMI. I overlay it with that blue line, which is consumer sentiment. And I'm particularly interested to see when those two diverge. Right now, they're pretty much in agreement. So both home builders and consumers aren't feeling all that great. Whenever home builder, or sorry, HMI is below 50%, that's considered, sorry, below 50, it's considered negative sentiment. And that's where home builders have been for quite some time now. And you can see here, let me point again, right here, it's been hanging around just above the pandemic lows. Now, importantly, what I want to point out is that while it stayed flat, if you look under the hood of the HMI, there was a surge in the builder sentiment in the Northeast. And that's probably what helped drive a lot of the gains in the future sales expectations. Those increased to a 6-month high. That means that builders are more positive than they've been in 6 months about sales 6 months out. Kind of surprising given some of the other data I'm going to show you. So here is housing starts, and housing starts doesn't say that home builders are confident about more confident about sales going out in the future. In fact, let me again draw a line here, sorry, a circle, just so you can make sure you see what I'm talking about. And starts have been slowly declining the last several months, and in fact, they are close to the lows from 2024. And I suspect what's happening is builders are being smart as they have been since the great financial crisis, and they are pulling back because they see inventories building and building and building. No pun intended. The inventories are growing and they naturally need to pull back on their starts. So that's what's going on there. We will see what happens going forward as the seasonal trends start to unfold. And let's see if the home builders start to pick up starts in anticipation of a stronger spring 2026 when mortgage rates presumably will be a lot lower. Okay, here is new residential sales. This is what I meant by likely there's going to be a revision. You could see here, let me again draw just to make sure we're clear, that there was this big surge. And this is an anomaly. I mean, new sales, new single family home sales just don't increase like that. There's nothing in the builder earnings reports to suggest that we should have expected this. Now, they have been incentivizing sales, they have been buying down mortgages. So I do still expect some sort of breakout, but certainly nothing this dramatic. So we'll see what happens. I also noticed when I looked under the hood of the data that there was a surge in the share of sales to $1 million, sorry, for homes that are sold for $1 million or more. I think it went from about 2 or 3% to 7%. Don't quote me specifically on that, but it was a notable increase. And I suspect once the revisions come in, that part of the housing market will shrink in terms of its share significantly. I suspect that was a big source. And of course, we'll see when the revisions come through. Okay, so next up, here is the what I call the nice and boring existing home sales. You can see this black line here is the total. The red is the condos and co-ops, and in the blue is single family homes. And the patterns are almost similar. Condos have been doing worse than single family homes for a while. They're both at or below where they were during the pandemic. Particularly look at condos, it's at essentially historic lows over this time series. And a lot of attention's paid to existing home sales on a monthly basis. But you can see here the pattern is very distinct. It's very almost predictable, just bouncing along these lows. And back after the great financial crisis, I made a decision to go to monthly reports because I just didn't see enough change in the housing market data to justify reporting on it week after week after week after week. A monthly report has been sufficient, particularly for the purposes of investing and trading in home builder stocks. So, what was interesting in the report from the National Association of Realtors is that they noted that there was a big jump in the share of sales that, sorry, not the share, but just absolute jump in the sales in the Midwest. Now, I looked at and they claimed that it was because of affordability. Now, I looked at the median sales price broken down by region. That's what you're looking at here, wondering whether or not maybe prices went down a lot. And in fact, if nothing else, if anything, the Midwest has actually been increasing. You can see the Midwest is this lighter blue solid line at the very bottom. I ordered this specifically so you could see it easier, colored it specifically so you could see it easier. And there's no change. And in fact, if anything, the Midwest on a relative basis has sort of gotten more expensive in recent months and maybe in recent months. So I don't think that's a primary reason for the Midwest sales increasing, but this did remind me of some research that the Fed has done to suggest that slowly but surely people have started to shift their buying patterns away from the Sun Belt, places like Arizona, particularly Texas and Florida, into the Midwest. Not because of affordability necessarily, because the South is relatively affordable as well, but because of weather. And I thought that was a very interesting claim. And of course, this is playing out very slowly. So I don't expect 1 month of data to suddenly show and prove this out. It's supposedly this is a trend that's slowly but surely playing out over the years. So this is something to just keep an eye out if you're looking at trading or investing in builders that have particular concentrations in areas of the country. All right, let's go to the next part. What we're looking at here is mortgage rates. This is the happy chart for home buyers. Mortgage rates have come down. They're still declining, sorry, and they're practically to the lows that we were seeing last year, 2024. Now, remember when I said rate cut fail? Well, rate cuts didn't fail mortgage rates because mortgage rates have gone down, even though long-term bond yields did react to the Fed rate cut by going up. That was the same thing that happened last year. So I'm on alert just in case mortgage rates actually stop declining because the bond market starts to anticipate more inflationary pressures in the economy thanks to the Fed stimulating things with its rate cuts. That remains again to be seen in the data. So again, happy times for buyers, but it's very notable that demand for homes in terms of the sales numbers have not responded much. And this could partially be because home builders in particular have been shielding buyers from the highest of the rates with their incentives. All right, so that's what I have for this housing market summary for September 2025. If you want more details, I write a lot more than this summary. go to my blog at drduru.com/122. Once you're there, you can just search on what happened in the housing market, and you can get all the latest articles on the housing market that way. You can also go to Google, believe it or not, and type in Dr. Duru. What happened in the housing market? Like you're asking a question, and a few of my pieces should come up at the top of the search results. Thank you for spending the time here. Again, like I said, this is an experiment. A friend of mine really encouraged me to do this. So if this did work out for you, or if you have some feedback on how I can improve this, definitely put them down in the captions. Otherwise, I look forward to seeing you the next time. Take it easy and don't forget to subscribe. Bye bye.